July 28th, 2026. In the NASDAQ, we had three kind of alignments we're going to talk about today. One around 9:15, the second one around 10:15, and then the final one around 11:40. And as you can see from our critical levels, which are these lines here, these horizontal lines, we open up at previous day's low. That's where we open. We open at previous day's low. We have a big sell-off, and if you remember, on a daily level, what's going on in the Nasdaq on a daily momentum basis? Well, we're having a big sell-off right now. We're underneath the 50, we're underneath the 20, and we are approaching the famous 200. And look at the volume. Okay, volume tells you if there's lies being told or if there's truth being told, right? When we have increasing volume, we know that what's happening right now is probably going to continue happening. That's just the probabilities of how the stock market works. So right now, with the volumes are, the volume is increasing. What are we doing? We're selling off. That means that the probability of sell-offs is higher than a 50-50. You could think of it as a 65-35 or something like this. So we open at previous day's low, and we crash right through the pre-market low, and then we find a bottom. We come back up to this pre-market low, consolidate, break through, and we break through the previous day's low, and we consolidate at the previous day's low for the remainder of the day. And we're going to get into the alignments and see what you possibly could have traded today. So let's start with the first alignment that occurred. It was early in the market, so we're not going to be on a 3-minute execution time frame. If we're really early in the market, like the first hour of the market, we're definitely going to be on a 2-minute or a 1-minute execution time frame. So we're going to look at this from a 2-minute perspective. Now, I'm not trading the first hour of the market, so take all of this with a grain of salt. I wouldn't even be trading this. But anyway, let me change this back to default here. Here we go. The first alignment that was anywhere near worthy was this one here, because it was somewhat close to this fair value EMA line, and the VWAP would be right around that area as well. See the VWAP pop in here. But nonetheless, it was before 9:30, so I'm not even trading that right now. And again, if it's early in the market, the first hour of the market, I personally would be on a 1-minute chart. That's how I would attack these realignments. So let's look at the realignment. The price action, we have the sell-off. The price action comes back up close, but not really to the EMA line. See the distance here? Not really close, so we're not interested. We want the price to come back close to VWAP or the EMA. So here, we're not even interested because it doesn't come close. So we sell back off, we come back up, now we're close to VWAP, okay? Now we're close. Now that is interesting to me. That's where I start to get interested. We have a sell-off, a realignment in the momentum right here. That's your cue to enter the position. So the entry would be at the close of that candle, stop loss right at the top of that candle. You would target a 1-to-1, and it actually hit 1.5 to 1 there. So that was the first alignment of the day, and you can also see the alignment channel forming right there. Asymmetrical distribution of probabilities based on the momentum of the 15 going in the same direction as the 1. Keep in mind at this time the 1-minute momentum hadn't even flipped over yet. It was just moving down, and we had a strong 15-minute, and we know that on a daily basis we are tanking on a daily basis, right? So those were our decision factors had I taken this initial trade. But I skipped it because I'm not trading the first hour of the market right now. I'm waiting after the first hour, and then I use a 3-minute time frame. That's what I'm doing. So we skip the first hour. First hour is right here. So after the first hour concludes, I look at the market and I see what's happening. We've had a sell-off, now we're recovering. We're coming back up to the EMA fair value line where I like to get interested. But we don't have a realignment to the downside yet. By the time we do have a realignment to the downside, which happens right here at 9:57 a.m., by the time that does happen, what do you notice? Well, the 15 is steeply going against us, so we should just not even do that. The 15-minute is not going with us anymore. It's not building in the direction we want. It's going against us. So we don't even take the trade. We don't even take the short here, even though the 1 hour was touching red recently. The 1 hour is recovering back to the top side, to the green. So we're just going to look for the 15 to continue going and maybe get a crossover, maybe get an entry to the long side. We're reading the momentums. And sure enough, look at the momentum with your eyes. Watch it. Look. Right there. not aligned, not aligned, now we're aligned. That's where you find entries. So that happened at exactly 10:15. That was my first trade of the day, right there. Was this a 1-to-1 win? Yeah, it was a 1-to-1 win. It was actually it was a 1-to-5 win. It went up 5R. But regardless, we just play the 1-to-1 right now. So that was the first entry, first trade of the day, 10:15. First, and you can see the alignment channel forming here as well. Why do alignment channels form? Why does that happen? Well, this happens right here because we have momentum on harmonically spaced time frames going the same direction. The 15 momentum is going one particular direction. The 1 hour is now reversing and realigning to that same direction. And then what about our 3-minute execution time frame where we enter our trades? Well, that's doing the same thing at this very point. So all 3 time frames are falling into sync, and that's where you get alignment channels. That's why those form. And let's look at the second or third potential trade you could have taken today, which was another realignment to the upside. Notice this realignment that occurred right here. See this? Going down, realigned to the upside. Now, this would have been a loss, obviously. The very next candle wiped it out. But why would you have known that this wasn't the best? How would you have known? Did you have any clues? Yes, it's the proximity to the fair value EMA line, which on a 3-minute chart is a 28 EMA line. So yes, this was a valid trade, and yes, you could say it was a valid loss. But I always recommend, and I always try my best, just like this trade here, I try to enter as we're moving away from the EMA line, as the momentum is realigning. So here, not really, but yes, it was technically. So then that would have been a loss, and then your next opportunity was right here, which this would have been a wonderful win. So had you taken all of these trades, had you taken all of these valid trades, you would have had 2 wins and 1 loss. Now, when you're trading a 1-to-1 system, that means you're up 1 hour on the day, and that is tremendous, my friends. If you can be up 1 hour on the day all the time, tremendous. Now, I'm not trading the last hour to 2 hours of the market either. I just don't even do it. I'm not even interested, to be honest with you. But was there another alignment for the rest of the day? Sort of. We had the 15 crossover to the green right here, so now the 1 is aligned with the 15. Now, do we get another alignment? Do we get another alignment? It's the end of the day, so I wouldn't be on a 3-minute chart. I would go back to a 1-minute or a 2-minute chart because we're in the last hour of the day. And technically, we had a realignment right here. Going down, going down, going down, going down. We realigned to the upside right here at exactly 3:20 p.m. And would that have been a 1-to-1 win? Well, you enter here, stop loss right below. Yes, that would have been a 1-to-1 win as well. So, no, I wouldn't have taken the trade. Had you taken it, it would have been a win, and that would have resulted in 3 wins, 1 loss for the day, leading you up 2R on the day. And then if you had taken the earlier trade in the beginning of the market on a 1-minute chart, you would have had another win, and you would have been up 2 or 3R on the day total. And just to re-summarize, just to tell you exactly what I just said, the first hour of the day you want to be on a 1-minute chart for your execution time frames because things are moving so fast with this particular strategy. The last 2 hours of the day, or the last hour of the day, we'll say, just to keep it consistent, really, the last hour of the day as well, you want to be on a 1 or a 2-minute chart again. I prefer the 2-minute chart. So the 1-minute chart here for the beginning of the day, last hour of the day, 2-minute chart, and then everything else in between, I'm going to be mostly on a 3-minute chart or a 2-minute chart. That's just matching the volatility with the candles, which is again how you stay within average true range in terms of volatility. With all that being said, that was July 28th. I will see you in the next one.